Hello everyone, welcome to my YouTube channel, and today I'm going to show you an example of bad investing. And I just want to go through an example. Basically what happened yesterday is I was sitting at dinner with one of my friend, and his friend sent it to him an offer to purchase, OTP, and he asked him to evaluate it and tell me if it is a good offer or a bad offer. And we were sitting across and he showed me the offer, and literally by sitting like 2 minutes I told him that why this offer is not good. And today I'm going to break it down so that when you are buying a property, you should know exactly why or how to evaluate an offer. And if you're new to this channel, my name is Saliq. I'm the founder of Flawed Properties, and I help investors make developer grade returns without being a developer, and I do that by developing bespoke villas and selling them on the behalf of investors, and buying, renovating and resell at profit. And I'm doing it for over 13 years. So if you want for this service, please, my WhatsApp link is in the description, reach out to me, and let's go straight into the example. And the project is an off-plan project which is about to be completed in near Dubai land. I will try to refrain from taking the name of the project or the developer. And the apartment that has been offered to the investor was a 2-bedroom 1,200 square feet at an asking price of 1.7 million dirhams. Now, the way we evaluate off plan is that we first see what is the view of the property, what is the specific or USP of the building, and also we see what is the internal usable space and external area. So if you look at this one, my screen will switch between the iPad and this one, so you exactly see how I have calculated it. 2-bedroom off plan, 1,200 square feet in built up area, out of which 798 square feet is internal usable area and 402 square feet is the balcony. Now in off plan or in construction or even in real estate, when we have an external area, the way we calculate external area is we take only 25% of external area because the usability of that area is less. So if I take 402 square feet times 25%, it is around 100 square feet. That is the usable space of balcony. I take 25%. So my actual area is now 798 plus 100. So let's take it as an easy calculation, 900 square feet all in. And at an asking price of 1.7 million. Now, when they do the marketing campaign, there are 2-3 things that the brokers, even us, they force upon is how good the payment plan is. You're about to get the property ready. It's a very large layout, 2-bedroom, 1,200 square foot. But if you know the layout or if you can scale the space of the layout in your mind, you would be surprised to know that a good reasonable 1-bedroom has 700 to 750 square foot area. A 2-bedroom 1,200 with 400 square foot of balcony is a very tiny 2-bedroom. But again, let's go on. So brokers, they will sell you it's a large 1,200 square foot, 1.7 million, and you are also getting a 4% DLD waiver. Now let's calculate the 4% DLD waiver. Let me just grab my calculator here. 1.7 million divided by times 4%. That is 68,000 dirhams. We will discount that from this purchase price, which is 1.7 million, and it comes to 1.63 million. 1.632 million. Okay. Now we have established that the actual apartment area is 900 square feet. If I take 1.632, I take the waiver, assume I'm paying the waiver. Okay. So 1.632 I divided by 900 square foot, which is essentially the usable area of my apartment, divide by 900. I get 1,813 dirhams per square foot. This is the price I'm paying for this real estate. The way we buy vegetables in kgs, bananas in dozens, we buy real estate in square feet. Common basic mathematics. So now I know that I am being sold a property at 1,813 dirhams per square foot based on the actual usable area, but let me be more generous. Let me take the example where the developer is actually selling me at 1.7 million divided by 1,200, which is their actual built up area. How much is that? Divided by 1,200, I am getting 1416 dirhams per square foot. And this is what is sold to you. When a broker who has his interest in mind, and I'm not blaming all of them, there are amazing brokers out there, they will make the calculations in this way that they look optically it is in your favor, and that's how they will show you, oh look, you are getting 1416 dirham per square foot in a building which is about to be ready. And if you go now and look at the exact transactions that are happening in that community with the same developers building, you would find out that actually in the same community the developer resale is happening between 1213 to 1300 per square feet. That is the resale market, where a 2-bedroom in the same developer's building completed recently are being sold at this price. Now, if you're buying a ready property of that developer for 1200 or 1250 dirham per square foot, while considering you are buying a property for 1400 if I go with that built up area, but if I go from the utilization perspective, you're buying for 1800, is it a good deal? Even if you discount 4%, it's simple. If you're buying at 1813 at the actual utilizable area, 1813, I just discount minus 4%, I'm paying 1700 some odd dirhams. Is it a good deal? So what I'm trying to explain you here is that when you are buying off plan, the problem is the lingo. A lot of time the lingo that is being used by the salespeople, it's like the jargon that a normal client says, oh okay, if he's using these words because I don't know the definition of these words, maybe they are true, but it is actually not that difficult. Let me give you another example. When it comes to selling off plan, brokers, they generally create a FOMO, they create a hype. While I'm recording this one private developer, in fact I'm about to record a short video about it. One private developer has said in the news officially that our new project has been completely sold out, and it is in the news. It is in the news officially, our new project sold out, creating a massive PR campaign about it. And brokers are still calling clients, offering them apartments and units in that project. And every time there is one single pitch, you know what, don't worry, I'm going to get you, somehow I'm going to get you that unit. Somehow, if the client is looking for studio, they will find out magically. Somehow the client wants a 1-bedroom, they will find it out magically, or a 2-bedroom or a retail. The problem is that we brokers are also used not only to sell real estate, but to create the hype and FOMO in the market. Let's say you want to buy off plan. There are few things that you need to know on a basic level. Number one is, a lot of time brokers, they use the term here BUA, built up area. They don't use the term GFA. Built up area is actually the whole constructed area of the apartment, including the balcony, terraces, whatever it is. And GFA, or a gross floor area, is we used to refer is that internal area, carpet area, or air conditioned area. Now these are three terms, they are not used commonly, but because I have a background in construction, I do this, I understand what's the difference between GFA and a built up area. Now when you buy an apartment, let's assume an apartment is 1000 square feet. Now you can take this example and take 2, 3, 4, whatever is your calculation. If the total built up area is 1000 square feet, you need to understand what is the utilization of the area, what is the GFA or the internal area or the carpet area. Some apartments, they are being sold, oh, amazing huge terrace. Okay, what is the utilization of terrace for me in Dubai during summer at 40-45 degree temperature? I use that terrace maybe 3 or 4 months of a year. So that's why we calculate utilization of balcony or a terrace as 25%. But when the developer sells, or they create the OTP or offer to purchase, or the brokers pitch the product to the investor, the built up area is 1000 square foot. I'm selling it for 1 million, which means you're buying it for 1000 dirham per square foot. 1 million divided by 1000, it is 1000 dirham per square foot. I'm just giving you a very easy example to relate. But if you look at the layout in detail, you would see that maybe the balcony is 400 square feet. So essentially, I'm buying 700 square foot, 600 of internal area plus 400 square feet of balcony. I take 25% usage, that is 100 square foot, 600 plus 1, 700. So you are not buying 1000 dirham per square foot. We're actually buying that apartment, which is for 1 million divided by 700. You are buying it for 1420 dirhams per square foot. And this is the lingo and the jargon they use to confuse client or create FOMO. And unfortunately now, when I saw that OTP yesterday, with my friend. Just in a couple of minutes, I told him, look, it seems to me a bit bad offer. And then I started to realize and think that there is a broker who is selling it. And there are two things. Either the broker knows that what he's selling is overpriced, or the broker does not even know how to evaluate that offer properly to sell it to the client. Until, now I'm going to give a big exception here, until or unless you are buying an apartment or a project or a building which is so unique, a branded one, sea view, last plot in that strip, something so unique that it is worth paying that 10, 20, 30, 40% premium. Now, when it comes to branded residences, again, it might be a question. In recent few years, we have seen a plethora of branded residences like an avalanche. Every developer is associated with a brand. I will not take the names, I wish I can. So when it comes to brands, my philosophy of opting a brand is simple. Is that brand adding a meaningful living experience advantage to that building? I.e., is this a hotel brand? And because if it is a hotel brand have their own certain criteria when it comes to developing, when it comes to the finishing quality, when it comes to the continuous management of the property. So is that brand adding that value? Number one. Number two is that my end user, what I mean by that, let's say I'm an investor, I'm going to rent out that property to someone. That tenant is my end user. I'm going to sell to someone who's going to live into the property. That is the homeowner. My end user will happily pay for that experience. Give an example. Address branded residences. Address is Emaar subsidiary of 5-star hotels, and many buildings of Emaar, they are managed by Address. Now, a lot of people are willing to pay premium for being in Address because the services and facilities you get being in Address. Now, the end user or the homeowner or the potential tenant, they're willing to pay higher than the market to want to be in that branded building. I hope I'm making sense over here and you're understanding the point. But if I'm getting a brand, just a building which has a brand for the sake of brand, car brand, fashion brand, ceramic brand, what value are they adding? Just flooring? So even I wish I can talk openly, but if you'll have a private conversation with me, I can definitely talk openly. So what I'm saying is that these brands we will only come to know, and we have seen it in existing cases, that these brands are not adding that much value because it is very subjective. It is not related to experience. It is just related to the bling. Yeah, that's the right word, bling, like the finishing. Oh, I have this wallpaper and all that, and this carpet or the closet color, etc. This is only bling, no meaningful living experience improvement of the resident. That's why when it comes to unless it is an exceptional brand adding exceptional value to that product, I would stay away from a brand. And whenever you need to evaluate an off plan, whether you're buying from me or anyone, my business model is predominantly focused on bespoke development, renovation, etc. That's like 80% of my business model. I still do day-to-day brokerage, but not major. So whenever you need to evaluate an off plan, you need to make sure that you understand the terms built up area, you understand gross floor area, you understand price per square foot, and also price per square foot. And also you can see that if this building has a ready comparable in the community where I'm buying, to see what my building will be potentially worth upon completion. Once you have this information and you know how to study the floor plan, vastu, direction, south facing, north facing, east, west, high, mid, low floor, what is the impact of the floor, what's going to become in front of the empty plot, is it a high rise, low rise, am I being sold on a 10% premium of the view which is going to be blocked once that plot is going to be constructed, etc. So these are few ways for you to evaluate off plan. I can give you the framework, and it is you who have to or who must know how to evaluate, because unfortunately, after seeing that example yesterday and few others recently, I have came to know that, and I have come to conclusion that a lot of time off plan is being sold or off plan buyers are being misled. I think I should use this word cautiously and give you an example. Let me give you a very real example. 2018-19, the market was in a bearish cycle, and a developer sold a 5-star hotel and residences in a community. They sold a 4-bed penthouse in that community for 5.6 million dirhams. The built-up area is 5,600 square foot approximately, with a massive terrace. I think the terrace is 1,500 square feet, and the building was delayed and subsequently completed. Now, let's look at the macro market situation. You know that after COVID, Dubai market has appreciated substantially, 15-20% year on year in certain communities. But overall, the market has appreciated substantially. Now, if we use the layman understanding, that apartment which was sold before COVID in a bearish market cycle was supposed to appreciate, because if we look at other examples, like a 4-bedroom sold in downtown in one of the penthouse building for 18 million. I have personally transacted it after COVID in 2024 for 34.9 million. Now that is almost the double price. Now, if this penthouse has appreciated almost double the other former example that I took, what is your opinion? Has that penthouse appreciated? Now, you would say yes, of course, because the overall market sentiment has improved. The penthouse must have appreciated. I regret to tell you. Number one is you have the slowest moving product in that building. Then you have massive roadblocks to rent the apartment long term, and that is because of the HOA and the hotel operator. And the same penthouse which was sold in 2018-19 for 5.6 million, in fact more than that, slightly more than that, now is available in the market, in today's market. I'm not talking after the conflict, even before conflict, for 4.6 million. You tell me, if I take the generic advice, that penthouse, taking the later example, should have valued 7, 8, 9 million, because the overall market has improved, but that penthouse has depreciated or have gone down in value by almost $1 million. How you can justify that? And this is where smart buying makes sense. This is what when you are buying, you need to understand what you are buying. I'm going to create a detailed video about it as well, but again, it came out of this conversation. So wrapping up the conversation, it's a bit long video now. What I'm trying to get you across is that please don't be driven by FOMO. Learn how to evaluate a deal. And if you are not, invest your time not in evaluating the deal, but invest your time in finding the right knowledge partner. Because once you have the right knowledge partner, that knowledge partner will do this due diligence for you. It's the same thing. You have a problem in your heart, you don't sit down and try to do the surgery yourself. You find someone, you invest time to find the right surgeon who then does this job for you. And same cases for real estate. Please don't make these mistakes, because then what happens if these people, when they don't perform or they buy non-performing assets, they create a negative narrative which essentially affects the reputation of the city. But I'm assuring you, the city has nothing to do with that. It is individuals who are essentially misguiding or selling, or maybe they're selling because they don't understand how to evaluate an offer properly. Thank you very much for your time. It was a little bit longer, but I hope I have given you value in this video. And again, as I said, I help clients make developer grade returns by renovation and by development. Our model is very simple to understand, very secure. And if you want to know more about that model, I have created many videos about it on my Instagram, on my YouTube. And if you want to reach out, my WhatsApp link is in the description. Thank you very much for your time. I shall see you in the next video.